Good morning and welcome to Longo Group Investor webinar. We will start with the company's presentation and continue with a live Q&A session. Questions to the company can be submitted in writing through the Q&A window that you see below the presentation. Questions can be submitted either anonymously or with your name. For your convenience, we are recording the call. It will be available for rewatch later today. That being said, let me hand over to the management of the company.
Good morning, everybody. I'm Dārta Keršule, CFO of Longo Group. Thank you for joining us this morning.
Good morning, everybody. My name is Edgars Cerbs, and I'm the CEO and co-founder of the company. Welcome to the Longo investor presentation. Happy to tell you a lot more about the company and about our bond emission. So here, let's start with the presentation we prepared for you today. So in regards of the agenda, we'll have 5 major. So first of all, the market overview, then we'll show you the corporate governance as well as business and financial overviews. And last but not least, we will go through the transaction overview of the bond emissions. So just to give you the first and most important key highlights of what Longo is as a company. And I would want to stress that Longo is largest used car retailer in the Baltics. So we have an offer more than 1,000 units for sale at this current moment. There are more than 140 employees working in 6 countries. Yeah? So the total revenue of the company last year amounted to almost 50 million euros, which were generated by the 7 sales points that we have in the Baltics and in Poland. One of the key criteria how we are getting to that is our unique monthly website visitors traffic, which actually amounted to 340,000 unique visitors. And so to give a perspective of that, that would be half of Riga city, including children, pensioners, and everyone else would be visiting us at least like once per month. Further, I would want to stress some of the financials. So the company has a very strong equity ratio that exceeds 50%. We also have a consolidated inventory value at cost that is close to 13 million euros. And currently our collateral coverage ratio comfortably covers our bond coverage more than 2 times. Yeah, so this would be for the very beginning to stress the key highlights. Going further, our mission of Longo is very simple and is based on 3 customer promises. First of all, we want to offer our customers wide assortment, the largest and widest competitively priced assortment. As I mentioned, it exceeds 1,000 units. Secondly, we want to offer convenient and safe experience for our customers in the Baltics and Poland. So obviously the industry has its own nuances and stigma. So we're really working very hard to offer the customers this ease of the purchasing a car with our company. And one more very important thing, the highest standards. So all Longo cars actually providing and guaranteeing the non-manipulated mileages, so full availability of the history, and we service and clean all of our cars, as well as provide a minimum warranty and extended warranty even up to 3 years of time. Yeah, so it's easy said and really hard to get it into the life, and we are working really hard on these promises, and that was one of the key factors for Longo success at the moment. Going further, I would want to stress that the company has been built on the option to become the leading player. So this is what we wanted from the beginning to address the business opportunity. And we base our strategy on the 4 key pillars. First of all, the management, the track record. So our company is having accomplished management, middle management from various industries that actually meant for not only just car retail, but like the retail and IT and financing and also investor relations, etc. The components that are necessary for running a successful company. And so far, we actually have a proven record for that. Next one, so company is built vertically integrating, with the sourcing procedure. So we are not just ordering cars from somewhere. We actually have brick and mortar presence in the Netherlands and in Belgium as well. We have like a properly and one of the largest of such kind preparation center of servicing the cars in the Baltics that we kind of operate, and all of the employees there are our own. Further, we have decided to go with a digital-first sales approach, meaning that we invest in the best-in-class digital presence driven by the performance marketing. Hence, we invest in the assets only for the light sales point focusing. So we focus with getting the customers, getting their interaction and the digital platforms, and we use asset-light approach for closing the deals, meaning that we don't want to invest in a very expensive dealership locations because the value would not justify the cost. And also IT infrastructure. The Longo company has built proprietary software development across all key functionalities. So it's our own software. We can use it, we adjust it, and basically do not incur any licensing fees and associated costs. Besides that, we have also integrated our IT infrastructure with the accounting system. So a lot of the transactions are actually transferred to the accounting system automatically, meaning that we have a very so we can operate all the countries, and actually we are not overexposed in terms of the necessary workforce to manage all of this. Going forward, so here you can see how Longo Group is spread out geographically. So in the Baltics, we are covering major sales points in the capital cities, and besides that, and we also opened in Białystok in Poland, which is Podlaskie region. So there we have 7 locations. Our head office is located in Riga, and our preparation center with around 75 employees is in Panevėžys, which is very, you can see, geographically centrally located for all of covering all of our sales operations. And besides that, we have 2 sourcing offices in Ridderkerk, the Netherlands, and Leuven, Belgium. So Longo basically controls the whole process from buying the cars to transporting the cars and selling them. So the first portion of the business is sourcing the cars, because those are the used goods. We are not ordering them from any manufacturers or factories. We actually establish the network in Western Europe and here locally, where we are having a great access to the quality cars at very competitive prices. So that would be the one portion. The second one is the preparation operations. So all of the cars, as I mentioned, with the high standards, go through the process of being serviced, repaired, diagnosed, cleaned, photographed to the high standard. And then with the logistics and the sales operations, we are managing the marketing, we're managing the stores, and managing all of the sales processes to get the cars to the final customer. And besides that, we also provide the after sales, as I mentioned, the warranties of our products, and we are re-engaging our customers also for the next purchases. I want to keep close contact with them. So basically, even if it's like one business, it more or less consists of 3 very substantial components and 1 after sales component. Looking back at the Longo development story, so the company is only 6 years old. It has been established in year 2018. You might find just a note on Lursoft, the registration of the company in 2017, but it's because we actually bought a shell company that was a joint stock company so that we could save time, and that's but the reality it's year 2018, and right away we opened our first locations in Riga and Vilnius. The next year, we right away expanded into Estonia and opened many preparation center in Lithuania, Panevėžys. This was a quick decision, and this is also kind of determined like the place for the for our preparation center, yeah. And also that year, Longo became fully independent, directly owned by all of the shareholders. So, and next year we had obviously the big issues with the COVID. Then we adapted quickly for the online model and also introduced our first home deliveries, which worked really well for us. Yeah. Next year in 2021, company actually listed our first bonds on Nasdaq. So we are almost 3 years on the Nasdaq exchange, and we are compliant with all the regulations. And the same year, we also hit 10,000 customer. Yeah. And further out with the next years, I will not go into the details, but we achieved quite substantial growth, introduced new models, new type of the sales locations, enhanced IT infrastructure. And this year, beginning of this year, Financial Times awarded us and placed us in the first 1,000 fastest growing companies in Europe. And actually in Latvia, we became the fastest growing company in the country. And 10th fastest growing in automotive industry in the whole of Europe. So I wouldn't say this is kind of anyhow the end, it's just the beginning of our journey. So let me tell you more further out about the market overview. One of the key aspects for our business is the size of the market. So we are estimating used car market to be more than 4 billion euros annually, with the high level of fragmentation in the competitive landscape. In the chart, you actually can see what is the comparison of the used car units sold versus the new cars. These are the estimates for the last year and also the euro estimates for these numbers. And what is fascinating that despite that Longo is the largest used car, specialized largest used car dealer, our market share, what we are estimating, is around 1%. So there's like a lot of growth potential that we determined from the very beginning. And to give you some of the examples of the companies, like most successful companies in Europe, like ours holding in Czech Republic and Kamux in Finland, who actually managed to achieve the market share of approximately 8 to 10%. So this has already happened in the neighboring countries. So we do not see the difference that why the Baltic countries and potentially also Poland couldn't be facing the same type of environment. And here mentioning Poland, because this is only for the Baltics. So Poland estimate is even 4 million used cars sold annually. So that would be even 8 times more than the Baltics together. So really huge opportunity, and this is what we are after for. Once we look in the competitive profiles, so we listed Longo versus 3 largest companies in our mind. So those companies, some of them are public, some of them are private. There are no specific information about their performance and their on the Baltic level. So that's why kind of we are not naming them. But if you are kind of in the auto business, I think you could conclude them who is who. But just to outline how Longo is different. So in terms of if we compare ourselves with the purely companies that are focused on pre-owned segment, so used cars, so there would be only one like this, and they wouldn't be in all 3 Baltic countries. They are highly dependent on the classified platforms, no particularly dedicated this type of size preparation facilities. And what is very important for the commission dealer, that they are just intermediary. So 80 or 90% of their cars, they are not owned. They're simply the middleman of kind of changes. So which kind of doesn't give control of the quality, doesn't give control of setting the right prices, and many other issues. Regarding the international brand dealers, indeed they are stronger players, and they are pan-Baltic, and they own the cars. But obviously, that's not they're not fully focused on the pre-owned segment. Yeah, and they do not kind of facilitate their preparation activity just for this business, and highly relying on the classified platforms. So this is how we are standing out of the market, and those other players are in the market for 25 or even more years. Yeah. Regarding the competitive landscape, I think it's very similar across all the 3 Baltic countries and Poland. Highly fragmented. You see, kind of the leader is getting only 1%. So we would say that even top 5 players combined shares in the low single digits, and there's like a very high amount of so-called customer-to-customer market, basically peer-to-peer selling, physical people selling cars to one another. And if you look at some of the more developed countries, this portion of business is shrinking and has shrank substantially. Regarding the main competitors, we have already discussed them. Yeah, brand dealers mainly focusing on the obviously new car sales, and selling majority of the trade-in vehicles that they purchase while selling the new car. And none of them are really focusing on the multi-brand approach. So all the cars that you will see, there will be 80, 70, or even more % only with the brands that they're selling as the new cars. Yeah. Regarding further market characteristics, so obviously, and this is not a secret, it's been the same situation in the Baltics, but also around the world. Low reputation and customer certainty, various issues with the mileage manipulation, low quality standards, etc. So all these stories, that is all continuing, which kind of also sets like a standard for us what we offer to the customers. And obviously continuous challenges with the local authorities and the fight against the tax fraud and with the vehicles, which is the substantial part of the issues in actually all 4 countries. And heavy influence of the car portals, classified portals that actually Longo stopped to use for, I think, exceeding now for a year in all of the countries. Yeah. Here is some of the information about why we shouldn't be afraid that the market wouldn't kind of crash, or there's a potential for it besides what we have mentioned, but also to grow. So here are the Eurostat data about the annual growth rate of the passenger cars, and we have highlighted in red color or sales markets, Estonia, Lithuania, Poland, Latvia, and you see they're like exceeding substantially EU average levels. So, and this information is for the last 6 years. So there is kind of further and further increase in the need of people for car ownership. And here is another one, also very important aspect, that most of the growth is in the used car segment. New car sales per population in these markets still very low. Yeah, and you've been seeing also kind of the split between the new car sales and used car sales is still dominated by the used cars. It might be changing, but that change will be fairly slow. Here's also very important aspect that I will show you, kind of the difference of the passenger cars by age in the 4 countries of our sales. You can see them in the middle, yeah, and what is the age of a percentage of the age in the market. And you can see that so a lot of cars also need to be changed. So the consumers eventually and for sooner will need to kind of swap for better product. Yeah, and this kind of also opens up the opportunity for us, and especially kind of in the segments that are in our price category, because I forgot to mention one important thing also about the average prices. So Longo average price is 13,000 euros versus key competitors would be starting with 20 and above, and even 40,000. So there's like substantially bigger market and accessible for this price segment. And I think this slide would with the data would well illustrate that. Going further for the corporate governance, Longo Group consists of the holding company and 9 daughter companies that are 100% Longo Group's ownership. Regarding the supervisory board, we have 4 highly experienced Latvian entrepreneurs involved in many different startups, very successful in various industries. They are not taking part in the daily operations, more on the strategic level, and also with the commitment to the capital of the company. As I mentioned, it's very, very highly capitalized, and not only that they're in the supervisory board, but also kind of believe strongly in Longo business model. Regarding the team behind Longo, so besides of Darta and myself introducing ourselves, we have like other professionals, and just to highlight a little bit more our experience. So maybe I'll start from left to right. So starting with myself as a chairman of the management board. So I do have quite substantial experience in the IT, finance, and various ERP deployments in some of the most known high-tech companies in the world. And besides that, I also worked at Bain & Company as a strategy consultant, mainly focused on the consumer, on fastly moving consumer goods and the retail, as well as IT and digitalization processes. And also the education. I and Jakob went to INSEAD business school. Our COO, or actually we worked together at Bain Company. He was much more specializing in the finance and strategy practices, and before that worked at Intertrust and Mears Pearson. Yeah. And Darta, yeah, kind of our CFO, and also very experienced professional working in fintech industries and insurances and audit, and yes, taking like a big part of moving forward and complying with all the regulations and audits, etc. Besides that, we have independent board member, British citizen. He actually was the operations director for one of the largest used car traders in UK, selling even 2.2 thousand cars per month, averaging that would be approximately 35 million pound revenues per month. Here he's helping us with the advice what is happening is in the industries and the most developed markets. What can we introduce there? How we compare to not only the Baltics but actually to European players. Yeah, and we have a very strong company, and a lot of our managers are actually part of the share options program that we offer them to participate in. So they are really kind of committed for the company for success of our business. So let's take a look a little bit on the business overview. So regarding the sales, yeah, so about the first 6 months of our revenue, you can see on the left-hand side the split between the countries. So we are indeed like Lithuania is our strongest and largest market, also with the largest presence. Then it follows with Latvia with 27%, then Estonia, and already we are seeing some traction in Poland. Besides our used vehicle sales, we are also getting additional income from the commissions of that we are partnering with the financing companies and insurance companies. So, and that portion basically doesn't have any cost of goods sold, yeah, and is a substantial part of our business. As you can see, our focus around the count of the cars sold is very, very kind of wide, and our major brands would be makes. I mean, Volvo, Opel, Volkswagen, Skoda, but even they would not amount to the half of all the sales for these brands. Yeah, and the preference of the customers currently in the Baltics is on the diesel car, and we are serving for that. And 43% of our customers are purchasing the car with the financing, and we are very often, or in most cases, actually facilitating these transactions. Okay, so let me kind of walk you through quicker with the other things because we are close to half of the time. But regarding how we are diversifying network of the sourcing, there are like two components. So our sourcing countries in the Netherlands, Belgium, as well our legal entity in Germany, where we're getting 70 to 80% of the cars, and we have established like huge network of our partners. And actually in Netherlands, we are one of the largest car exporters in the country. Yeah, and we are also having quite substantial presence also in the C2B sourcing. So we're purchasing the cars from the customers who are buying cars from us, and as well as from other individuals who actually, you know, that we are directly competing with the new car dealers, you know, of kind of getting those trade-ins. To give you an illustration of what the sourcing process is, how complicated it is, so that we are reviewing more than 10,000 cars weekly. We shortlist 1,000 of them and we purchase 100 of the cars. So out of 100 cars that we review, we actually purchase one. So there's like a lot of data is placed. There's a lot of thinking to achieve the right measurements that we want to pass to our customers. This summer, we actually made a very important investment. So we bought a preparation center for new facilities. They will exceed 300,000 square meters of industrial workspace and also 500 square meters of the office space. I will not go through the details, but basically this investment will allow us to increase the capacity of preparing even 1,000 cars per month. And we are estimating to kind of start working there already this year. And so far, everything is going according to the plan. And preparation facilities are the key differentiating factor for us and assuring the quality. And Longo has built its own integrated IT system. I don't think I will bore you with all of the little names because here I could talk for another hour or so. But let me just highlight like key 5 features just to see how far we got. So what we're having competitor and aggregated data web scraping. So for almost a year, we are looking at all of the used cars that are on the market in the Baltics and analyzing them and checking them daily. So basically, there are like 100,000 cars that we are looking, and we are analyzing data. What is selling? What is not? What are our competitors doing? How many cars they're selling? Are they repricing their cars, etc.? So this is a very valuable information, and we will be using it further, making the right decisions. Already last year, we have integrated AI-generated customer transcripts, so meaning that we're using OpenAI, have integrated in the CRM. So all of the incoming calls that we are receiving, so we don't have to kind of listen or kind of quality check them afterwards. Artificial intelligence does it, gives the summaries and indicates if there are any issues with a particular customer, so we can react very quickly. And we are also doing the machine learning based pricing model because we need to review all those thousands of the cars, and basically computer does most of the work. I have already mentioned also the integration of the back office with the accounting system. So a lot of the manual work is actually done automatically, and we don't need like a lot of the resources and humans with the potential of the errors. So this happens automatically. And last but not least, we have introduced each of our car has a QR code, and on that base we actually know everything that has happened with the car, especially with the preparation, when it arrived, how it was diagnosed, what issues were found, who has repaired it, what spare parts we placed into it, how much it costed us, how quickly it was done, then when was it afterwards kind of sent, published. So all of these things, like we actually have access and actually in real time. What we are really proud is our web traffic and the heights that we have achieved so far, which allowed us to leave the dominant classified platforms that are actually very expensive. So basically, we don't have to pay those money, but all of our competitors have to. And it looks to me that they'll have to pay more and more and more with every year because the classified, especially the most dominant, it's a public company, and they are stating in their IPO, in their shareholder information, that they think that they can charge even a multiple of what they're doing now. So for us, it's going to be a good benefit, because already in September of this year, our website traffic has exceeded 340,000 unique visitors, which is kind of driven with the wide assortment, quality cars. And I think the bounce rate is also kind of very, very, very low for these matters, and with the high mobile traffic, and actually very good duration of exceeding 44 minutes per session. And we've been experiencing further growth of it, and the more it goes, the more it will strengthen. Here is also that Longo is becoming strong and loved by customers' brand, and I will not be afraid to use it, because there are actually some proof for it. Google ratings, like currently, I think we took this information just a couple of days ago. Our ratings are from 4.7 to 4.9 stars, and some of the, let's say in Lithuania, we have more than 1,000 reviews. In August of this year, we also did the brand survey with Norstat, and you can see kind of how the rate, I think there's a little bit of mistake, so it's not in Estonia year 2022, but 2020. But in 4 years, our brand awareness has increased, fourfold or more, especially Styrents in Lithuania, it's like close to 40%. Of all the drivers in the country would recognize Longo brand. Just a very quickly kind of overview of the auto journey, basically kind of how it goes through Longo process. So from the moment that we are acquiring the car, purchasing it through the sourcing operations, we're also doing a proper inspection and evaluation. So we're actually assessing what needs to be done, kind of what is the condition. Then we do those changes if they are necessary. So we're reconditioning everything. And then we can certify it, because we're actually certifying the cars, because the company gives the promise on the mileages and on the quality of the cars. After that, we are listing and marketing it, and engaging the customers, kind of answering their calls, their visits, everything else, like tracking them and analyzing the salespeople performance. Then we are doing the financing and documentation, and financing obviously if it's necessary, and then the delivery pickup, and afterwards we engage with the customers with the after sales marketing. So it is also very important for us to talk about the ESG aspects, because our company strives to craft a sustainable business model, and become actually leading car retailer in the Baltics and Poland. And here will be 3 things that I would want to outline to you. So Longo is facilitating a circular economy. Just to give you some of the information, for instance, in Estonia and Latvia, we have compared the average emissions, CO2 emissions of the cars that we are selling, and they are 20 to 24% below the new car sales in these countries. So actually, the cars that we are selling, we also kind of looking at their CO2 emissions. We are facilitating the circular economy, and nowadays, and we see it more and more than used cars and used goods, cars, clothing, furniture. That's that this is the trend that is on a fast growth projections. Besides that, Longo facilitates inclusion and equal opportunities. That goes for the gender, for the nationalities. We have, I think, exceeding 10 nationalities that are working in the Longo company, if not even 15. And we follow also high governance and ethics standards that are absolutely in line with the NASDAQ regulations, and besides that. So let me pass floor to Darta to give you insights on the financial overview.
Yes, thank you, Edgar. So I will explain you more about the financial overview. I will start with the key financial highlights. So I will guide you through the figures we are having here on the slide. So we have figures for last 2 full years and for half year 2024 and half year 2023 for comparison. We can see revenue, our gross margin, EBITDA, inventory levels, and 3 most important ratios that are covenants of our bonds. So that is capitalization ratio, debt service coverage ratio, and also collateral coverage ratio. So starting with revenue, as you already previously heard, Longo within 5-6 years time has reached almost 50 million euros turnover, out of which 5% is from additional income, that is commissions that we are receiving for selling financing and insurance of our partners, and 95% is from sales of cars themselves. What we are especially proud of and we want to emphasize is the improvement in gross margin. As you can see, effort into what we have put into improvement of gross margin has yielded in results, and for 6 months 2024 our gross margin reached 15.2%, which is approximately 3.5 million euros. The improvement comes both from improvement in metal margin, that is sales of cars, and also for gained wider partners network for selling the additional services. Our EBITDA is approximately 3% of our revenue. And what we want to highlight here is that currently our operations are built for higher sales volumes, meaning that once we get the extra capital for expansion and our revenue will be growing, also actual EBITDA margin will be growing, not just in euro terms, there will be growth. So the improvement is expected in this ratio. And goods for resale and raw materials have been more or less stable in the comparable periods. I could note that main change if you compare the balance at the end of June 2024 versus balance at the end of June for 2023, there is a decrease as there are 2 factors. Basically, it's decrease in available capital that can be deployed for the purchases of cars. One is that we had a put option for our first bond with 6% fixed interest rate at the end of 2023. And additionally, at the end of June, we were already preparing for purchase of our new service center in Panevėžys, which cost us more than 1 million euros. So the funds were reserved for this matter. And what concerns the ratios of Longo Group, you can see that our capitalization ratios throughout the years has been consistently above 50%, highlighting the financial strength of the company. Debt service coverage ratio means that our EBITDA is twice as large as our debt servicing costs, and we are comfortably above the required level of the bonds. And collateral coverage ratio, which is really important for us and for these secured bonds, has been consistently been above 2, meaning that the value of the collateral is twice as large than the secured bonds outstanding of Longo Group. In the next slide, you can see a bit more of a deep dive in our inventory and also collateral coverage ratio. On the right-hand side, you can see that our secured bond value is 6.4 million, whereas consolidated inventory at cost is twice as large. And of course, it needs to be noted that with the new financing gained, also our inventory value will be increasing. You can also observe that our car stock is very well diversified, with the most popular makes of the cars being Volkswagen, Opel, and Volvo. Here we have included a consolidated statement of comprehensive income and also balance sheet. However, I won't be explaining those, as you can take your time and read them in detail. They are pretty detailed slides. So yeah. This is another important part of the balance sheet, which is our funding profile. You can observe that our funding consists of our equity, which is equity from shareholders, and also subordinated bonds, and plus 2 of existing bond issues, in total of 6.4 million. Additionally, in July, we have received loan from one of the largest banks in Baltics, Citadele Bank, in amount of 800,000. So all of these external financial liabilities are planned to be refinanced with proceeds received from this bond issue.
So let us give you also the overview of the financial targets. So why we need the money and what we plan to do with this. Yeah. So Longo ambition is to grow our revenues to 160 million euros per year by 2028, yeah, which would be approximately 3 to 4% of the Baltic markets. We have achieved in the growth levels and from 2019 to 2022 of 58%. So basically, we do have like a very strong experience. We have used the last years with the changes in the market to consolidate and improve the unit economics, and now we are ready for the further stage of the expansion. And how do we achieve it? We will base our strategy on the 2 pillars that are related with the expansion and of the assortment and the presence, and other 2 on kind of improving the unit economics. So first of all, we plan to extend the geographical presence, so to facilitate further conversion from the online, where we were really strong, to seamless purchase close to home. So we will be opening new locations in the Baltics and Poland. Second one, so we want to kind of offer even higher assortment and variety to our customers to improve further conversion from when they can come to site to actually making a purchase and finding what they want. We do have a good information of all the 100,000 approximately 100,000 used cars on the market. We know what is selling best, so we want to kind of expand into these directions and increase our market share with that. Besides that, we will continue improving the unit economics and hence additional services that we've been doing quite successfully now, and the size and the scale will allow us further improvement. And besides that, everything that we'll be doing, it will be based on the data and IT facilitated systems. So less and less human involvement, but more and more of the decisions made by the algorithms and by computer. So very straightforward what we want to do, and the base of the facilities we actually do have. With the preparation center, with the sourcing capacity, now we need to increase our sales and inventory exposure.
Yes, and last but not the least is our transaction overview. I will quickly walk you through our bond offer. So the subscription has already started on 11th of November, and it will last until Monday, 25th of November. Issue date of the bonds will be 29th of November. And we will be listing these bonds on the regulated market, regulated Nasdaq Baltics market within 3 months after issue date. And the use of proceeds are, as previously mentioned, we will be refinancing current liabilities of the group, and also investing in working capital to fuel our growth further. So that is purchasing new cars and also expanding our sales network. This is the term sheet of the bonds, so it is important to emphasize the bonds are secured. They are secured with our subsidiaries of Longo Group assets, meaning that is inventory of cars and also real estate that we have purchased in Lithuania. Coupon rate will be 10%, and we will be paying this coupon monthly to the investors. This is a public offering, so everybody in the Baltic states can participate in the offer. There are also call options on the bonds, so it means that if company decides to terminate the bonds sooner, it's possible after 1 year with calling them at 101% and paying premium to the investors. Yes, so these are the most important figures of our bonds. We have also introduced the investor loyalty program, which means that if investor invests more than 500 euros, he or she can participate in this program, and depending if they have purchased a car with Longo or not, receive benefits. So if there is 500 to 1,900 euro investment, it is possible to get 50 euro discount to a car purchase at Longo Group, or a car wash coupon. If you invest 2,000 until 4,900 euros, it is possible to get 250 euro discount for purchase of a car, or also this car wash coupon for bond purchases of 5,000 and above. The benefit is 500 discount for a car purchase of Longo, or if you have already purchased the car with us, you can choose to take paint and polishing, paint protection and polishing service provided by us. And to finish up our presentation, I would like to remind you our key investment considerations. So Longo Group is a market leader in the Baltic states, and it's important to remember that it's market leader and just has 1% market share. So it means that there is significant potential for further growth of the group. The bonds are secured. The security is car inventory, which has a fast turnover, and also real estate in Panevėžys at market value. We need to emphasize that there is a strong shareholder commitment. Longo is supported by strong strategic investors providing financing, and as mentioned previously, our capitalization has been above 50% and currently is 53%. Longo has high brand awareness already, so as you saw, the aided brand awareness is between 20 and 40% in the markets where Longo is active. And last but not the least, Longo Group is an experienced issuer. We have already issued 2 bonds. Both of them are listed on the First North market. And additionally to that, we have a Big Four audit. We are audited by KPMG Baltics, giving extra assurance on our financial ratios. So to sum it up, Longo Group has done a lot of homework during the past few years, and is ready to increase its capital and move to next growth phase. Yeah. So thank you for your attention, and we are ready for the questions.
Yeah, thank you very much.
Thank you for the presentation. There are many questions waiting to be answered. For the participants, a reminder to join the discussion. Please submit your question through the Q&A box. The first question that we have received: is it possible to get money back sooner than after 3 years?
So the term of the bonds it's 3 years, meaning that in a standard scenario, we would be paying back the money invested in a bullet after these 3 years to our investors. However, bonds will be listed on Baltic regulated market. And it means that there will be secondary market for these bonds. And in theory, it is possible to sell these bonds, and also for other people who are interested to buy them on this secondary market.
Thank you. Will I receive full coupon payments or tax will be withheld?
So regarding tax, as these bonds will be listed in the regulated market, it means that for all non-residents, private and legal persons, tax won't be withheld by Longo Group. And what concerns to Latvian residents, so legal entities, there won't be any tax withholding. And for private persons, if the bonds will be held in investment account, Longo Group also won't be withholding the tax. So we are urging investors to purchase these bonds via investment accounts.
Thank you. Given that the market value of used cars, which are a major part of collateral, is subject to fluctuation, how does Longo Group assess and mitigate the risk of depreciating collateral value? Are there mechanisms to adjust collateral requirements in response to market changes?
So let me answer this one. That's our daily job. We're looking at the car inventory, and you have seen that we have certain margin already on the cars, yeah, and so which exceeds at least like 10%. So if that the drop has to be quite quick, and besides that, we are kind of ensuring the fast turnover of the inventory, so that if there are any kind of fluctuation in the price, it means that the new cars that we are buying, we're also buying for this kind of changed pricing. So as we are not ordering the cars from the manufacturers who has the price lists, so that we actually kind of further can negotiate and use the conditions. So meaning that if any kind of decrease in the price, so we will be kind of keep selling the cars, purchasing them at a lower valuation as well, and basically we'll keep our margin. So that's our approach to this.
Yes, and maybe I will add also from bonds perspective, there is also in the bonds, bonds allow us to add additional collateral if market situation change or there's a situation of need, we are able to increase the collateral. For example, add another subsidiary to the current collateral base.
Thank you. What are your expected revenue and EBITDA levels for the coming years?
That's a good one. We have announced now that our expected revenue level for year 2028 of 160 million euros. We have introduced you already with the market size that we are seeing, that the market is around 4 billion euros if we are not accepting that will grow further. So this would kind of be only 3-4% of the market share. So besides that, the kind of the years we are kind of not disclosing, as well as the EBITDA ratios. But I think Dart has mentioned already that the clear overhead that we are having, it actually can facilitate substantially more transactions. So meaning that the revenue will grow, and we are anticipating that our EBITDA could grow faster because the overhead actually can facilitate substantially larger options, and we have been building the company for a larger scale. So, but I cannot give you the details per year, as this information we are not disclosing.
Do you receive commissions for facilitating financing? If not, why not?
We do receive. So this is also the statement that we actually have made. 5% of our revenues are commissions from financing and from insurance. So on 4.7 million euros, 5%, that's about 2 million euros that we're receiving per year. And kind of this number most likely will be growing substantially more.
Thank you. Where is the profit? Revenue grows, inventory as well, but when and how will you earn substantial profit?
So let me start with the fact that year 2021 and 2022, Longo was making profit. So the revenue grew very substantially, and we also kind of realized the profits. So what we've been kind of doing, investing a lot into the expansion. So we opened door Polish operations at the end of year 2022. So 2023 was majority of the expansion. So we are kind of incurring the startup costs. And if we are looking at the, kind of, I think you are referring to the year 2023, where we realized a net loss that was approximately only 1% of the net revenue. So in these terms, we kind of thought that it would be still great, good investment for us to further facilitate our capacity, geographical reach, and we feel confident that with the increased revenues, with the new inventory that we actually need the capital to sell it, we can quickly grow the EBITDA, pay our interest expenses, and also realize the net profit. So meaning that we want to grow, but not at all expense, and do it smartly.
And maybe I can add that actually for bond investors, we urge you to think in terms that I think EBITDA is the metric bond investors would be looking at, and our EBITDA has been comfortably covering our debt servicing costs previously, and it is planned to continue in such way also in the future.
Thank you. There is a similar question from another participant. What is the reason for losses and declining net assets in the last 2 years? And what is expected to change going forward?
Yeah, I think we have answered this. Maybe we can talk more about the declining net assets. Yeah.
Yeah, I think we have answered actually. Yeah, because the net assets are declining due to the losses, and the losses mainly the losses were incurred due to launching new operations in Poland, where we had some startup losses, and of course there's also a factor from increase in Euribor, as we had not expected that our interest at that point would be growing so significantly.
Let's talk about your expansion. How important for company growth is Lithuania, and why? Additionally, what financial results for activity in Lithuania the company predicts for the next year? And finally, what are the main contributors for it and the risk factors as well?
So let me take this one. Whether Lithuania is important for a company, absolutely. You've seen it's almost half of our revenues are in Lithuania. We also have the most people, the most cars in Lithuanian market. Also, in the terms of the economic growth, I think Lithuania lately was doing much better than the other two neighbors, yeah, namely Estonia and Latvia. And another very important aspect, for all the cars that we are selling, they are not meant for specific cars. So we're advertising them across. And close to 50% of the cars that we sell, they go where the customer is. So meaning that if Lithuania is continuing growing and advancing, and you've seen that our brand recognition is very high, the highest in Lithuania, and also the same way the web traffic that we are receiving. So if we can be further facilitated, very good. And this is also the country where we are planning to expand geographically.
Thank you. Currently, the last question that we have received, as you receive approximately 5% of commissions and still generate loss, it means that your pure car sale business is loss generating. How is that?
Let me also answer this one. And it goes together with a lot of businesses. So a lot of retail businesses, they are not just selling the products. There's a lot of additional income. And the car retail for the largest used car retailers and also new car retailers, even substantial portion of their gross revenues are coming not from the metal margin. So I would even argue that it's not like because of it. I think this percentage is very small. If we compare ourselves with the US players and some other players in Europe, this can be kind of substantially higher because the commission access to the customers is very valuable. And if the market develops more, it becomes more difficult, and the financiers and insurances need to kind of have the access to the point of sales. So I think this is a good normal situation. I expect it to keep increasing.
Yes, and I think here maybe it needs to be emphasized that also these commissions, like the Poland example we mentioned previously, so we just entered the market. It means that we have not yet penetrated, all of the potential we have there regarding commissions and additional income from insurance partners and financing partners. So there is still a lot of potential in this additional income section of our revenue.
Thank you. In September, you acquired Preparation Center. Why such a decision?
Why? I think we wanted. We worked for 3 years to find the right location for the right price. For you to kind of get a little bit of a perspective, we would want to build something similar with from a scratch that would cost us 5 to 6 million. Now we purchased the preparations at 1.36 plus additional 500,000, maybe a little bit more that we will invest. Have one of the most, if not the most modern preparation center, which will facilitate not only the quality but also cost of the each unit, the preparation cost of each unit. So, and also the independence, because if it would be dependent on a rental property where the contract could expire, what we would do now? Now we are kind of having this like core component. And as I mentioned to you, a lot of the cars, they are not sold where they are actually stationed. So we are transferring, and a lot of the cars, they're sold while they're still in the preparation process. So we actually send it from there to the customer. And so I think it's like great success that we actually could acquire this facility at such a competitive price. And just to kind of one last nuance to explain you the economies of scale. So our preparation facility also has a 360 photo booth, a very expensive and modern technology where a car drives and it spins around. Computer, everything photographs it from the various angles, etc. So that whole process takes 2-3 minutes and spins around, everything happens. Yeah. We have paid around 5 years ago 100,000 euros for it. It has already photographed 20,000 cars. It could photograph another 20, 30, 40,000. So that would cost us something like 2 euros per car photography. If we would need to ask a professional photographer coming without the also logistics bringing back and further and the backgrounds, that I think 5 years ago that already costed 60, 70 euros per car. So this and many other things can improve the quality and also give us the economies of scale, decrease the price for the of the cost of goods sold, while still kind of allow us to kind of maintain this margin. That's like one of the key aspects. And if we look at the largest companies in the world, the most successful, they are really excelling at this, and this is how we stand out. And also just replicating, designing such a preparation center from scratch, that would be a really, really complicated task, and it took us 4 to 5 years to actually get here.
Thank you for the insights. We have received 2 follow-up questions. The first one, how are you satisfied with the tax environment in the countries that you're operating in?
That's a good question. So tax environment in the countries is determined by the government. Yeah, so there's nothing to be satisfied or dissatisfied with. So again, our cars are selling in 4 countries. So meaning that where the tax environment is better and facilitates consumer purchasing, the cars are going there. One of the key aspects of our cars, they're low emission comparing to the market, even to the new car market, as I mentioned to you. So those tax environments that facilitate low emission cars also circular economy, it will be kind of beneficial for our company. But so far, not so far, we will be obviously adjusting and complying with all the tax regulations, no matter what. So I wouldn't want to kind of state my personal opinion whether I'm satisfied or not. It's kind of, it is how it is. We are actively engaged in the discussions about the tax environment. So this is what has happening now, what's happened in Estonia. We actually actively participated in the parliament discussions, explained and kind of gave the industry advice how it should be done and what things should be changed. So indeed we are, but then it's up to the governments to decide what is the tax conditions.
Mhm. One more question to go. How will you guarantee collateral amounts if you will sell these cars for customers?
Oh, okay.
I think it's important to understand that it's constant process in our business that we are selling and purchasing the cars. So each day we are placing bids, we are using all of our channels and actually purchasing the cars. And on the other hand, we are selling them. So in this case, that there could theoretically be a situation when one of this arm, stops for some reason and for example don't purchase the cars, we will continue to sell them and we will receive the money. We will have the cash and cash is included in this collateral coverage ratios because cash is also already readily available to be paid out to investors.
Thank you. This was our last question. Edgars Dārta, over to you for the final remarks before we're closing the call.
So thank you very much for the active participation. I really like the engagement, the questions. Indeed, some of them are kind of tough questions. We are ready to answer them. Also, you can reach out with all the questions that you have to investors@longo.group. Really want to be transparent. So all the information that we are allowed to reveal, we will. Yes, so thank you very much for the participation.
Yes, thank you very much. And I would also like to add that don't hesitate to contact us. There is phone number, there is email address on the webpage, and we are open to answer you any questions about the business. And also, if you have any technical questions regarding, purchasing a bond or a question about tax. So yes, thank you.
Thank you for being with us today. Goodbye.
You all have a good day. Bye-bye.